And right now it's time to welcome our next guest, somebody whom Jeff and I both admire, and that's Drew Pelton, president and founder of Drew Pelton Investment Services, a retirement income store located right in Baton Rouge. Drew, thanks for being back on the show, and thanks so much for being a good friend of the income generation.
Thanks for having me, Dave and Jeff. Looking forward to the show.
Drew, it's great to see you all the way from Baton Rouge. So welcome aboard here. However, we want to focus on what we're discussing today. And we see a lot of clients that we work with have complacency issues, especially at these stock market peaks or based on the amount of money that we have. How do you deal with your clients and making them uncomplacent, let's say?
Well, one of the big things I have found myself saying in my seminars, my presentations, and to people when they come in the office is, it's your money, it's your retirement, and it's your life. And you've got to embrace that and not be just going down the path of investing in the stock market only when the market's up, because too many people are complacent and too many people are thinking, oh, all is well right now, and they're really not prepared for the future.
Great point, Drew. You know, inflation is in all the airwaves today. That's all we hear about inflation. We've seen gas go up $1.30 a gallon since the November election. How do we deal with inflation? How do you deal with inflation with your customers when you approach that issue?
Well, there's got to be an investment strategy that includes growth, that includes predictability in income. And most of that has to do with not just being subject to the stock market. You've got to look at investments that are outside the stock market, bond and bond-like types of instruments that can give you the predictability and dependability of income. And then you've got to have some growth, assuming you're not taking all your money from dividends and interest, you're going to have some growth. So unquestionably, you've got to factor in all the numbers to make sure that you're getting ahead and you've got more money and more return than the monies you're taking out.
You're talking about organic growth, reinvestment of interest and dividends. I get that completely. So 30 seconds, real quick. When somebody's complacent because they've got seven-figure money, I deal with a lot of average folks. You have a lot of people come in that have $1 million, $2 million, $3 million. How do you keep them from being complacent, especially when you know the long-term effects of inflation and maybe they don't really understand?
Well, one of the things is to talk about market history, to explain to them that if they need income at the top of the market that might be acceptable to them, that if they need that same amount of income along the way, meaning when markets are going down, they're going to have to sell more shares of their stock portfolio to get the same income, which means when the market goes back up, they're going to have less in their portfolio because they had to sell more shares to get the same income.
And that's a big problem because now you're essentially you're dealing with inflation with your living costs, but your assets are deflating. Much like Tom Brady's legendary football there a few years ago. So, Drew, thanks so much for being with us here on The Income Generation. We really appreciate having you back.
Well, thank you for having me, both Dave and Jeff. I appreciate it.
Now, you be sure to stay with us because right after the break, we're going to address two other common mistakes, and that is the decision of when to take Social Security, the right way and wrong way to do it, and also not being prepared for required minimum distributions. I'm David Scranton, and we'll be right back on The Income Generation.